All right.
Boom, it says we are live. Welcome,
morning.
everybody.
Good afternoon. Welcome to the Global Digital Securities Summit. We're super excited to see all of you coming in here. We have 278 people right now. Gonna give it a couple of minutes, let everybody get in, and then kick it off.
All right, yeah, so everybody, we have the chat on the right side. We have the, you know, you can see people on the sides if you like to send private messages and things like that. We'll bring a poll up pretty soon, and we'll bring the speakers up very soon as well. So very quickly, my name is Alon Goren. I'm one of the founders of Draper Goren Holm. Here's my partner, Joseph. I don't know if it's mirroring us because some of these chats are different, but Joseph is up here with me. And we, you know, I'll just quickly introduce us, and then we'll get this show on the road because we've got such incredible speakers. We want to give everyone time to do their thing. But we are early stage blockchain investors. We like to be the first check into blockchain companies, and we're very excited. We came from the crowdfunding world ourselves in the regulated space, and so we're really excited to have a couple of great portfolio companies in the space. Full disclosure, Ownera and Vertalo are both portfolio companies who you'll see today, but also other incredible players in the space like R3 and TokenSoft and all of the institutional folks who are joining us today to discuss digital securities and security tokens. So very excited to have them all. Our feelings in general are always that all boats rise with the tide. So we're very community oriented. We do a lot of events like Los Angeles Blockchain Summit, which used to be CIS in Los Angeles, which will be digital this year, and all of these incredible events. So thank you so much for joining us. Joseph, what did I forget?
Very excited to see everyone. No, I think we should bring Michael up on stage now. He helped us organize this event. Michael from Security Tokens Realized in the UK, a good friend of ours. Let's bring him up on stage and hand it off to him.
All right, thank you, Michael, for all of your help organizing this. Michael put together the first event that sort of this steamrolled into, so it's really exciting to have you. Thank you, Michael. We'll jump off the stage. Thanks everyone for coming.
Absolutely,
have a great
working
time,
with
everyone.
you guys. Yeah, really a pleasure working with Draper Goren Holm on this. And what's also great industry, and one of the key guys in the workshop was Anthony Woolley. Anthony was the MD, Chief Innovation Officer for Societe Generale, and now he's picked up a mission with Ownera, and he's also leading the initiative which he's going to talk you through next in terms of this agenda in this couple of hours. So over to you, Anthony. Thank you.
Okay, good afternoon, everybody, from a sunny London. Good morning to those in the US. It's a pleasure to be with you. Who would have thought we would be here on a virtual conference come May? I wanted to start by just wishing you and all your families well, wherever you are. Wish you all of the best. This, as Mike said, what we wanted to go through at the start of the conference was to update you on a really interesting initiative which was launched and is gathering a lot of momentum over the last few weeks. So I will just share part of my screen. Okay, the technology is working well, which is good to see. Okay, so early on, actually, in the COVID crisis, a colleague of mine, Amy, wrote an article on Medium, which he published on LinkedIn, and it kind of went a little bit viral within the industry. And what he was talking about was he was recognizing that going into the crisis that we've been in, the immediate priority was health. It was governments looking after their population, and rightly the first priority. But as weeks went on and we started to move forward, I think people became more and more aware of the scale of the economic crisis that we faced. Within that, I think it's true to say that many of the companies that are starting to suffer and will suffer the most are the private companies, are the backbone of our economy. There are hundreds of thousands of companies around the world that are all fundamentally sound, robust, profitable, that have been put under pressure during the current crisis. And question, or the article that we wrote, posed the challenge: what can we, the financial industry, do to help these companies as we emerge from the crisis? So the challenge will be that unlike really, it's an unprecedented situation, unlike any other time in the past. As we come out of this crisis, we're going to find all of these companies needing capital at once. And the question is, how do we triage that? How do we manage that? Can the industry scale to deliver that? And the reality is that if you're a large company, if you're a public company, it's fine, actually. You have access to liquid, efficient public market. If you're a private company, or if you're a very small company, there are ways that you can gain access to finance to suit your needs, maybe. But if you're in the middle, if you're a large private company, the current processes for financing are very manual. I think for those of us that grew up, for want of a better word, in the secondary markets, in capital markets, we're used to these large technology-intensive, efficient markets. But the private markets are not like that. They don't have a technology footprint. They are slow, manual, legal heavy, inefficient, and they don't scale. So this article gathered some momentum, and through our networks, we put out this call to action. And we pulled together a virtual workshop. It was actually run by Mike and the team from Security Tokens Realized on the 6th of May. And we had a fantastic turnout. I think those that were on the workshop, what they were most impressed with was the diversity of the group. You often get forums which will just have large financial institutions, or will just have fintechs, or just infrastructure providers. Well, this had a mixture of everybody. And I think during that session, there was a realization that maybe if we focus, and we focus in the right way, there is something we can do to help leveraging the technology of digital securities. And so the result of that was the formation of industry-wide group to respond to this challenge. Okay, time's ticking. But as I say, private markets, if you understand them, you understand how inefficient they are. There are no standard mechanisms, automated mechanisms. There's no network effect to bring private companies and investors together. And up until now, there hasn't been a business model that potentially supports efficiently supporting and financing those private companies, which at the end of the day are a lot less liquid than the public market. Many of you on the call, and many of you on the call because you're particularly interested in this domain. And I think we all know in the last couple of years, there's been tremendous progress in the area of digital securities. And if you talk to any large institution, they are exploring various solutions. We now have large companies pursuing solutions. But I think it's fair to say at the moment, we're still in a world of islands. We're still maturing in terms of how we achieve this. And I think it's recognized that these islands won't bring us the network effect that the industry needs if we're going to help. So out of that discussion, there was really this objective of, can we digitize the global private market using a shared interconnected network rails? And can we do this in relatively short order? If we can deliver these benefits, right? Standard due diligence materials, we can achieve that network effect. We can automate legal and regulatory compliance. We can get leverage around ultimately instant settlement. The prize is ultimately, as many know, instant delivery versus payment, which I'm sure will come in time. And then that network can start to provide the interfaces for the custodians, for the secondary market support, and ultimately in an efficient network, deliver new business models. So we had this working group, and out of that was the decision to form a steering group, an industry-wide steering group, to see if we can drive that forward. And we found a perfect home for that, we think. There's a global not-for-profit organization that some of you, but maybe not many of you know, called Global Digital Finance. And that is an industry not-for-profit that provides, we think, a very good environment to support this initiative. We recognize that everybody involved in it has commercial interest. And so we wanted to find a home that was open, balanced, objective. We want to be very careful around things like antitrust around any of these initiatives that we launch. And so we agreed with Global Digital Finance to launch a private market digitization steering group under their umbrella. We've had the first meeting of that steering group, and the turnout was impressive. We had 54 people, executives from major banks, exchanges, law firms. I think we looked at the list, and I think we had 4 of the 5 largest global investment banks and 5 of the 10 largest global asset managers, along with some real leaders in this field for the largest technology providers. Some of them you'll see on the stage today, and fintechs leading in this space. And when you have that luxury, I mean, that's a real platform and energy there that you can deliver this. And so I'll wind up in a minute to keep us not too bad off schedule. But what the group is looking at is that we recognize that this technology has the potential to transform a lot of financial services, but you don't get there in one go. You know, the metaphor we might, or the joke we might use is, how do you eat an elephant, right? One bite at a time. But we do believe that if we focus on these private companies that need help coming out of the crisis, and we focus purely on the primary markets, the issuance part of that process, that there are no technical or, in principle, regulatory or legal impediments to us doing that. It's just having the level of industry cooperation to make that possible. And so we set ourselves an ambitious target, which is to deploy a shared network infrastructure within the next 6 to 12 months. It will follow all the greatest principles of openness to provide a capability to integrate various services. We're focused on technology services that exist today. We are going to avoid building new as much as possible. We're going to leverage on those technology firms that are there. It is a network that's focused on institutions and institutional clients. It's not retail. This isn't a crowdfunding platform. It's dealing with large private companies. And ultimately, a technology network doesn't achieve anything in of itself. So as part of the initiative, we're also bringing the companies and the assets to that network so that we can achieve an effect of bringing companies and assets to a growing network of investors and achieve that capability. So it is ultimately a focus on primary, private, and institutional grade networks. So that's plowing forwards now. We have an implementation program around 4 streams of work around technology, institutional, regulatory, and then the assets that we will bring to that. Okay, I will leave it there for the moment because we're going to run straight into a panel with some of the individuals that were present in these forums to discuss what this is all about and where this takes us. So if we can bring the panel members up on stage, that will be great. Hi, so we have with us Ben-Daivd, Sven Werner, and Andrew Peel. Just to check all the technology is working well for you guys as well. Can I just let you introduce yourselves briefly and your roles in your respective organizations? Maybe Sven?
Yeah, my pleasure. So hello, my name is Sven Werner, working for State Street. My role really is around looking at disruptive technologies such as blockchain and see how it applies to custody, security tokenization, and creating new markets for these type of assets.
Okay, Ami?
Hi, my name is Ben-Daivd. I'm the co-founder and CEO of Ownera. I've been working on the digital security space for the last 3 years since the very first security tokens launched in the market, and I'm very happy to be here today.
And last but not least, Andrew?
Hi, so Andrew Peel, working for Morgan Stanley, heading Digital Asset Markets Division, covering all topics around exchange, interactions in the digital asset space, client interactions using the new technology.
Very good. Welcome all. So I think we have to give a little bit of credit to Ami for getting this ball rolling with this article that he wrote back in April. So I'll start with you. So what was the inspiration behind that, and why do you think it hit a nerve?
Well, I think this whole thing started after the first month of the lockdown and isolation and Corona crisis. In the first month, everything went quiet from the bank's side that I was working with. Everybody were very busy trying to reprogram how the organizations work from home, how everything will continue to operate and so on. Nobody had the energy to talk about digitization and about what's next and so on. But at the same time, I was seeing my friends in the health industry really coming together into joint efforts, joint initiatives to go and redesign new ventilators, to go and get plane loads of protective equipment, and I saw it firsthand because I was part of several such groups developing an app for proximity and things like that. And then I think after a month, people started to come back and emerge in the financial community and started looking at, hey, what's happening with the economy? It's going to be very bad coming out right now. And all the banks that I was talking to, they were telling me that they were in triage mode, working really hard, much harder than any other day, because they had all these companies that wanted to get financed. And my thought was, and it wasn't just me, I was talking to several people and yourself as well, and Mike and others, about maybe it's actually the opposite. Maybe the fact that everybody's struggling is because all of these companies are trying to raise capital. They need capital to survive. They're trying to raise it in a non-automated, non-digitized environment, and nothing is efficient, and therefore it's very non-scalable. And maybe actually the solution is digitization, because we know what digitization can do and what automation can do in terms of scaling a market. So we started saying, can we actually get together and do that thing that we would do anyway, because all the financial institutions know that digital is coming. It's just a question of when. So can we just get together and do it now? And that was basically the basic premise of this post. And I put it up, and I didn't expect much, expected a little bit of back and forth, but not what actually came out of it, which is, led to where we are today.
Very good. And so turning to Sven and Andrew then, I mean, from an institutional perspective, Ami presented this picture that somehow, in the private markets, we don't have the efficiency of the public market, maybe due to lack of an industry-wide marketplace for them. Why is that the case today in such a mature financial services industry? Do we lack a business model to serve, to build an industry market for those less liquid companies, or have there been other limiting factors, tech, regulation, etc.?
Shall I make a start?
Yeah,
okay, yeah, absolutely. So I just want to say I very much agree with Ami's notion of saying digitization is never a bad idea. I fully agree with that. Now, in a way, if you look at private markets or private placements, obviously what we may call lack of standardization is also the ability to tailor-made investments to the needs of either the investor or the entity that is raising capital. So you see differences in terms of leverage and the time horizon people invest. And I think a lot of these factors would remain over time. There is a question, I would say, around if you are able actually to scale up things. And what we've seen over the crisis was the fact that where there were areas that still required paper or paper documentation, obviously under the current operating model that a lot of the banks are subject to, i.e. working from home being prevalent, these have become a challenge. So I would say that is really, for me, step one. And also in that sense, a regulatory requirement. Is there a way to replace documentation requirements that exist today in terms of paper and replace that with something in a token form where your level of ownership across multiple participants can be recorded more effectively? But there's this one point which I find quite interesting and intriguing when you guys put that panel together, is the fact around direction to crisis. If you look back in history, has been, I would say, in most cases where we as an industry have been successful to make significant strides into improving efficiency or scaling up processes is a reaction to crisis where the status quo was no longer sufficient. So I think that is something that, if you want the positive aspect out of that, to see other areas where we can make things better. But I would say, and this is the key thing for me, it has to start really with the business case. So what are you trying to fix? A pure model which would say we're taking out some costs here and there and making things a bit faster, better, I don't think would change much. But if you think about how beneficiaries today invest in private placements, it would be for a fund structure, but maybe there are ways as a result of these tokenizations that you tokenization strategies that you could bring institutional investors directly together in a peer-to-peer model with the underlying fund investors, and therefore create a new kind of investment mode. I think that's sort of the key to think about. It's not just the operating model where everything stays the same, but actually cutting through the chain of intermediaries and making certain processes much more efficient than today.
Yeah, I'd agree with your sentiment around the business case. I think, there's a lot of initiatives that have been driven by the idea of reducing costs, which is great. But actually, first and foremost, one of the mantras from my time in large institutions is focus on the client, right? And fundamentally, you want a business case that is connected to serving your clients. In this case, we're talking about private companies. And if you've got a business case, a revenue model, etc., around that, you can implement that successfully. Ultimately, you'll probably end up building more efficient rails and taking out costs, right? But if you start with a cost reduction, it tends not to achieve the momentum, maybe. Yeah, and Andrew, what are your thoughts?
I think definitely some very, very good points raised. And as you mentioned early on, I think there's this world out there where we see more and more interest in the likes of platforms for crowdsourcing, for crowdfunding, be it Seeders or SharesPost and some of these platforms where you start to see some, pre-IPO equity markets developing a secondary market, and also some, platforms where you raise capital directly from smaller investors. But for the private companies, the kind of medium enterprises which are really the backbone of the economy, there isn't necessarily any standardization or really scalable way to deploy capital there for a lot of people that are probably very interested in the space. And I personally think, if we look back at how other markets have been developed over times, then it's usually efficiency or addition of scalable technology that's brought that to more people. And I think we hopefully start to see the same scenario unfold in this marketplace as well.
Yeah, I think the other key observation that Sven made is often, I think the saying is sometimes a crisis is a catalyst for change, as terrible and as bad as these crises are. I mean, we just have to, hey, here's Graham. I'll go in for Graham to come up stage. Come to Graham in a moment. But these crises are often a catalyst for change. And as Sven says, if nothing changes, then industries have a way of maintaining their sometimes comfortable status quo. Who could have thought that we would have all adapted so well to flexible working? I know many organizations have been driving that agenda for a number of years, but it's just been accelerated, probably 5 years of cultural change in 2 months, right? And here we all are online. So I did want Graham to join us. Graham, CEO and founder of Archax. Graham, do you want to just introduce yourself? Can you hear us, Graham? We can't hear you.
No, we can't hear you, Graham.
He'll come back in a minute. There we go.
Okay.
Yes.
Yeah,
Whilst we wait, and you mentioned this crisis, actually, in preparation for this panel, I did a little digging in my archive. I thought that's actually maybe not a bad way to look at this. If you think about one of the markets that in Europe developed extensively over the years is the Eurobond market, that then ultimately led to creation of market infrastructure such as Euroclear and Clearstream. And I found this book in my archive. And if you can see for people what's on there, this is actually the reason why we today have market infrastructures like Euroclear and Clearstream. And that was a bridge in Italy. And I know that Ami likes bridges because he taught me about the Brooklyn Bridge problem. And it's very similar. So basically, 50 years ago, Italian car manufacturers were trying to build roads and bridges, and it needed financing, and that created a private placement market, which then created interest to do secondary trading, which then led to a creation of market infrastructure. So that sequence that I think you identified as a potential solution, where you start off with private placements, and you don't need on day one to worry about the secondary trading. This comes naturally over time. This may sound outlandish when I first thought it, but actually looking back in history, we can prove over and over again that these are very effective ways to develop a market. So I think that's something to think about. Let's not crack everything on day one, cut it into pieces and see where we can actually create some value.
Yeah. I mean, on that, breaking it down, Ami, I know something you've focused a lot on is the regulation around this. I mean, can we do this? I mean, we got lots of people on this summit that probably got their sleeves rolled up in the thorny issues of custody of digital securities and the secondary markets and all that good stuff. So can we deliver this?
I believe we can. I think that exactly what you said, Sven. The secondary market was perceived initially in this market as the big benefit of security tokens. But now with the crisis, what we're seeing is that potentially there's huge demand for primary as well. And once you have primary in place and you have all these companies on a network, then secondary will follow, because the technology supports secondary. It's just the regulators will have to follow up. And Graham will tell you, he's been struggling with them, but, looking to get his first license and so on. But it's going to take some time. But primary we can do today. So there's no reason to wait. And I really love your example. I'd love to see that book later. It's a great example. And I think that one of the key things, my friends on the panel, you come from the banking environment. I come from the entrepreneurial world. So as a private company to raise money, the way that the actual raising is done is effectively random. It's based on who I happen to know as a CEO, which VCs I happen to know. And actually, there might be thousands of investors who might be interested in a specific investment. They don't even know that it exists. So if there was a network where I could put my primary raise and put it in front of a lot of people, the clients of financial institutions that are known and recognized, and the documentation would have been standard, and maybe even part of the documentation would have been broken into technology. So that would be, a very, very powerful place for me to be. So I think that we have almost a chicken and egg situation here, where financial institutions have all of their clients and investors. There are all these companies that want to reach this market, and it's a chicken and egg. If you had if the financial institution knew that 1,000 companies were standing in line to raise money through their investors, they would come in. And the opposite is true as well. If the companies knew that all the financial institutions are connected to each other and can create a market, the companies will stand in line as well. So we're in a position where this needs a kickstart. And I think now could be the time to actually affect this kickstart into the market.
Very good. And Graham, I think you're with us again. Can we hear you?
Yeah, I can hear you. Can you hear me now?
Yeah.
There's a wonderful metaphor in here, because we've been talking about the primary market. And what comes after the primary market is we need to bring in the guys that are delivering the secondary market. And Graham is the founder and CEO of Archax, who are implementing a regulated secondary market trading venue for digital securities, right? So what do you say when you look at this? And I understand you talk to people all the time that would love to list on your exchange. What feedback do you get back from them around the need for this?
Yeah, so first, thanks for having me, everyone. I'm sorry, thanks for your patience there. I guess, and I've heard some of you cover some of the points here. We've seen about 400 odd digital securities in issuance at the moment. It seems to be increasing all the time. There's more credible projects coming along. And I think, what's clear to me is that people are accepting really that this technology is being built. We're seeing more institutions involved. But where people are still struggling really is on the fundraising side. And I think one of the key points and that we're quick to tell people is this isn't really an asset class. What this is new technology. So securities have been around for a long time, and this is simply pretty much everything that existed before, but on new technology. We've got a chance to kind of reinvent the way that the financial market works. And the way that we're looking at this is we're setting up Archax in London to be able to facilitate trading of digital securities. And as part of that, we require the ecosystem moving along. And up until now, we've seen quite a lot of tokenization companies creating these tokens. And they've been coming to us and saying, look, we'd love to list on your market, but can you help us raise money as well? And that's not really what we're doing at the moment. Raising money is a challenge, and I know you covered it earlier, Anthony. You said that, you know, if you're a small company, you can go crowdfunding. If you're a large company, you can go institutions. So there's institutional, but there's this whole swathe of companies that are sitting in the middle that really should have better access to capital markets. And I think in the past, the cost of being able to access those capital markets kind of kept them away and left them really with no way of raising money. But by driving through all these efficiencies, hopefully the ability to create digital securities, to market them globally, have them traded on a global network, suddenly makes it more accessible to everyone. I think why that's relevant for now is because, you know, you've got a lot of SMEs and companies at the moment in trouble. You've got governments providing funding, which are useful for some companies, but really these companies would love nothing more to go and tap the wider market. And I'm hoping that that's what we're able to facilitate with the ecosystem being built here.
Yeah, indeed. So we've seen, I mean, many of us, we've all been involved in these technologies and this domain for a few years now. Maybe some of us come in from different routes, either from large institutions, fintech, the entrepreneurial route, etc. And I think it's probably, I got involved with blockchain and then what we call distributed ledger technology back in 2014. And we're now over 5 years down the road. And we've seen these beautiful arcs of innovation out in the public world. And we've seen a lot of people with their sleeves rolled up spending a lot of money within the regulated financial services industry. But we've not really had this material impact within the industry for large institutions up until now. And so you've had people saying, well, is what's happening with blockchain? Is this going to happen? What are your thoughts? I mean, is this going to impact the regulated financial services industry in a material way now? And if so, how's it happening? Maybe Ami.
Yeah, I think that I thought now might be the right time, because I've been following the progress of the industry, and maybe if Corona crisis happened a year ago, we wouldn't be sitting here, because we just didn't have the solutions back then, and financial institutions didn't have the experience of testing and experimenting, and regulation was still being questioned even for the primary. But now we are a year later, and actually when Corona hit, we are in a position where, and we'll see it later in the technology panel, there are many companies that are offering solutions. Pretty much every financial institution that I talk to has a program around digital security, some sort of a test. Some exchangers are building, some companies are issuing test platforms. SocGen did something the other day. DTCC did something last week as well, which was very advanced. And you see everybody's testing and everybody experimenting and getting kind of used to the idea. And now we have an external force almost that is forcing us to look and say, can we expedite this? Can we actually get it in time to help these companies that Graham mentioned, you know, hundreds and thousands of them that need capital? And I think we are at a point where organizations now need to stop, experimenting in environments that are silos and disconnected, and need to think about what is the handbook for a financial institution to connect to other financial institutions, to work on the same network while competing and having their own business model and killing their competition, but still making a market that is more liquid for primary assets as well. So I think that's the timing is pretty accurate, actually, in terms of our ability to deliver.
Yeah, I think also what I perceived over the last few years is you had like these two separate worlds, the public world and then what was going on in regulated financial services industry, and you feel that they were on a parallel track, and now they've started to come together. And I think, you know, I can feel that sort of more of a common recognition and understanding that what we want is not isolated islands within the financial services industry, but conversely, we don't want an environment where we don't have the right regulated institutions, you know, the right environment for bringing people into those networks, KYC, AML, all that good stuff, but not in a restricted way, right? So I guess it's finding that we're getting to that point of this hybrid network, right? Which maybe is what we need to deliver the best of both worlds. I don't know if you would concur with that or feel that convergence going on right now.
Yeah, I would just say something quick about this, and then I let the Sven and Andrew comment. Is to say that there were good reasons why financial institutions didn't go into the crypto networks and so on, because on these networks we saw all sorts of problems. Non-regulation, we've seen a lot of scams. There are all sorts of problems on them which are inherited to the way that they're built, because anybody can join, any asset can come in and say whatever they want. Sven, you mentioned earlier the Brooklyn Bridge problem. Anybody can launch the Brooklyn Bridge and sell it and say that it's their bridge to sell. So there are good reasons why crypto is not ideal for financial institutions that by law and by regulation, only regulated entities can actually distribute. It's the law. On the other hand, going to the other extreme is not useful as well. Building silos and private networks that don't connect to each other is also not useful. So there has to be a middle ground of a network which is on the one hand institutional and strong, and financial institution can actually recommend to their institutional investors to invest in, while at the same time is network between them. So you can get the scale and you can get the network effect.
Yeah, and I think you see that convergence reflected in maybe this initiative that came together, you know, to have that diversity of institutions, fintechs, etc., coming together was quite inspirational. Any other thoughts, guys?
Yeah, no, I'd just say, no, I agree with you. It's been evolving over the last 4 to 5 years in terms of sophistication of major institutions experimenting. But in the last year or so, I think we've started to see acceleration of some really proof of concept projects within major institutions moving now more into the regulated production phase. So we've seen the likes of major exchange players jumping in. In Europe, for example, Deutsche Börse has been very, committed to the topic, bringing in new teams to cover new digital business and new issuer services. You've seen the Swiss Exchange, for example, announcing the launch of a fully end-to-end regulated digital asset marketplace. London Stock Exchange as well, thinking around proof of concept projects by at the end of this year. So I think there's been a number of years of experimentation. Admittedly, most of the experimentation has been around the kind of enterprise private permission solutions internally. But I think now we really are moving towards a more interconnected platform where multiple institutions connect via, existing intermediaries. And I do personally believe that over time this evolves as well to include new intermediaries where a lot of the innovation in the public space and a lot of the innovation in the public blockchains is really accelerating at a far faster pace than you start to see in the traditional institutions. And I think at some point the worlds will begin to merge and combine. I think that's certainly probably been accelerated by this recent shock in the markets due to COVID-19.
Yeah, I think also, I was involved in many of the industry initiatives back from, formation of R3 in 2015, launch of Ethereum, Hyperledger. Actually, in big institutions that tend not to be so idealistic, they're more pragmatic. They tend to be hedged across various emerging technologies early in the evolution of these things. But I think on the institutional side, a lot of people were preoccupied with the fact that in the secondary market, we've got 30 years of spaghetti, for want of a better word, right? We invented securitization back in the late 70s, early 80s. The electronic markets opened up late 80s. And then through the 90s and 2000s, this massive explosion of the financial market. But that also builds a lot of legacy. And I think that a lot of institutions set off on this path thinking, how do we unravel this spaghetti? How do we get this? How do we get, a few $100 million out of each of our cost base? But actually that starts to feel like it's got a certain futility by it, right? Where you've only got so long in your life, and I'm not, you worry about whether the spaghetti will be unpicked before the end of your days, right? But I think it comes back to this thing that maybe the place to start, and we have these two separate worlds almost in large institutions. You have the technology intensive secondary markets that have been going for the last 30 years. And then you have this almost proudly technology free primary markets, both on the not only on the private, but on the public side as well, in terms of how companies go to IPO. And maybe if you take wholesale banking in the broadest sense, it's all of those worlds. And if we've got a environment which is technology free largely, but there are new business models, new opportunities, maybe that's where you start. And if you can build new networks there, then you can start to move down through solving the custody of digital securities problems, start to bring in, Graham, we'll need you in your secondary market. And then maybe you get new rails to wholesale banking rather than trying to unpick all of that legacy. Does my thesis hold water, do you think?
I think on that point of spaghetti is quite a key one, Anthony. And I've spent a lot of my career working on mapping spreadsheets between a variety of systems. And obviously, we want to avoid any world which introduces those inefficiencies. And there is a danger of everyone working in silos, like I think Annie said earlier. So whether it be everyone using their preferred blockchain, whether it be everyone focusing on the regulations that only affect their jurisdiction or their own security token standards, we should try and avoid these at all costs to make things as interoperable as possible. And on the primary versus secondary market, obviously we're building a secondary market, so I'm slightly biased. But I think there's a place for everything. There's a place for a security to evolve from a kind of private status through a bulletin board onto a more fully operative secondary market. But it's just worth noting that bulletin boards have existed before. In the credit crisis, we had a really clunky secondary market for hedge funds that didn't really get any traction. I've noticed a lot of companies lately, like Cedars, Bank to the Future, Carter, all announcing their secondary markets. But if they're just silos of liquidity, they're really not going to succeed. Really, there needs to be a global network for true liquidity to be adopted.
Very much so. Okay, very good. So, Amy?
No, I think it brings me back to the beginning of our conversation. Out of the post that I wrote, when I looked at the list of the people that actually joined the group yesterday to talk about actually finding a solution where everybody can interconnect, we had 4 of the top 5 investment banks were represented. We had 5 of the top 10 asset managers. We had a significant amount we had both major enterprise blockchains. We had several technology providers. It looks like we might be getting the traction and the momentum that we need, which is a unique point in time where everybody is saying, okay, it's a good time to look at things together. And maybe you don't get exactly what you planned for originally, and maybe the solution is not as perfect as you thought your own technology could be. And there's maybe some compromises there, but at least you can have a layer, even a thin layer of interconnectivity between the parties, and then all of these things that we're talking about can actually be deployed on top of them very, very easily. So to unravel the spaghetti, if you will.
Very good. Yeah, and I think Graham was saying about interoperability as well. I think it's also understanding how these different initiatives will work together to achieve what we need at an industry level. And that was one reason we've created this private markets initiative under Global Digital Finance. I give a little shout out. They have various other working groups running at the moment. So, for example, got a good friend Hervé over at ING Bank are running a working group on custody, the problem-solving custody for digital assets. I think DTCC are running an interoperability working group. And I think it's important that these initiatives understand, the scope they're focused on and then how they interact so that you achieve a coherent result. Otherwise, it just feels like yet another industry initiative, right? But I think, this initiative has its place very much focused on those private markets that we can help now. Maybe that's a little bit of ahead of the arrow. And if we can move in terms of that delivery, then it provides the connections, the APIs, the interfaces to bring in the rest of the wholesale banking ecosystem, right? Okay, so we're doing this initiative. I mean, how do we maximize our chances of success to really it's coming out of this crisis, these companies are going to need help in the next year or two, which isn't very far away. And yet we don't want to be here 5 years down the line talking about this. So how do we maximize our chances of really getting this done?
I think one point, Anthony, that we've noticed is that since we started out Archax, you've kind of got two extremes. You've had the people who are really traditional, institutional, and have kind of looked down at blockchain technology in a way, and then you've got the kind of blockchain evangelists who kind of don't think regulation and governance should exist. And I don't think either of those stances has really helped us move forward. And the approach that we've taken is that we're trying to work with regulators. We can kind of see the end goal of decentralized exchanges and everyone's their own sovereign and the like. But actually, in order to get there, you need to take people on the journey. So you need to understand what the regulatory requirements are and make sure that you're operating within them. And then explain to the regulator why working with this technology actually benefits them. Explain to them having real-time notifications of every single transaction that's happening on every venue on a real-time basis is beneficial to them. But don't kind of go in there with the full plan of how all regulation is not going to exist. We're going to get rid of CSDs. We don't need banks anymore, because you're just not going to get buy-in and credibility from regulators and institutions. So I think it's important to understand what you're required to do right now and have the vision of where we can get to and take everyone with you on that journey.
Well, Graham, I think to your point, the whole group is designed from the ground up just to service financial institutions and their clients and the assets that come to them. It is definitely around financial institutions, because what I found out personally when launching through crypto networks before is that you can tokenize an asset, great. Now you have to distribute it. If you don't have a license to distribute, and you don't have a database of clients, and you don't have like some of the asset managers on the group have 2 million clients on their dashboards who are accredited and who are institutional. If you don't have that distribution, then there's no point in doing it. So we're definitely focusing on financial institutions here. And just to answer your question, Anthony, in terms of practicalities of how to get it done, I would just say very briefly that, to repeat what you said earlier about the 4 streams, and I think these are important. One of them is the technology stream, to talk about how technology interacts. One is the institutional stream, to write the handbook of how institutions can join in and connect and basically give everybody a sense that they're not betting on a horse, that actually they're doing what the rest of the industry is doing together, so that it'll be a lot easier for management to take the decision, to take the plunge. We talked about a regulatory environment, where a regulatory subcommittee, which will actually work on the regulation for primary, but also engage with, like you said, Graham, engage with regulators. And the last group is to actually communicate with the asset and start bringing the assets on the network. So trying to do something that can actually meet within 6 to 12 months and actually start launching something real. Because otherwise, as you said, it's not really a crisis-led group. We don't want to be sitting here in 2 years. We want to be behind it. We want it to be behind us in 2 years.
Yeah, and I think you said a key thing about distribution. If you don't achieve the distribution, you're going nowhere, and no single institution or entity is likely to achieve that. I mean, talking frankly, you've got a lot of people on this summit that have lots of different commercial interests. Some are complementary, or you might see people sitting next to each other that are fierce competitors. But you don't actually get anywhere unless you can create that network on which you can compete later, right? So I think that's key, and it's an industry recognizing that achieving that distribution is to the benefit of everybody, but most importantly, a benefit to the clients, the companies that we're trying to reach, right, to deliver a more efficient industry network. If we get that distribution, then you can bring assets and investors together on a scale that the industry just hasn't been able to achieve up until now, right? Okay, any last thoughts? I think we're just coming up to time. Otherwise, we will move on to the next panel. Very good. Well, I think this is going to work quite easily for me, because I'm handing the baton to Ami, who's moderating the next panel. So special thanks to all of you for joining this panel, and I'll hand over to Ami, and we'll move on.
Yes, we're going to talk next about the technology part. All right, so this panel is to talk about the technology aspect. With Anthony earlier presented told the story about the group that was set up to work on digitizing private markets, to help companies out of the crisis and so on. And I'd like to focus this discussion on technology for financial institutions, because after all, they are the entities that have the distribution and the license to market assets and to reach investors and so on. So they are really the heart of this initiative. And we have some very experienced people in the digital security space here in the panel, some on the blockchain layer, some on the solution and services layer, some like me kind of in the middle in the connection network layer. So I'd like to start by asking each of you to tell us briefly about yourself and where you see your company's role in the ecosystem. So why don't we start with Unity?
Yeah, so hi, my name is Nitin and I serve as Director of Digital Asset Labs in IBM. I also founded the Blockchain Labs back in the day, so I've been there for quite some time, and I think when we met the last time, we talked a whole lot about in terms of not just the evolutionary elements of applying technology, but also from a revolutionizing the entire capital market space. So I'll keep it short for now, but I do want to discern, at least my approach lately, and I think Sven said it the right way in the previous session, was not to completely, change the whole thing in one swoop, but focus and discern between infrastructure and instruments. And I do want to discern this because infrastructure leads to some of the elements of what we want to build in terms of rails that allows to move assets, that allows to be able to facilitate these business processes around instruments. An instrument then embodies some of the elements of whether it's digital securities, or security tokens, or digital fiat. Each of these sort of assets that move on infrastructure will sort of enhance some of the business facets of this whole thing. So at least in this conversation, we'd like to focus on some of those elements of how do we discern those and how do we approach this in piecemeal fashion. And I think we've spoken about this in the past, is how do we address that in a meaningful way so the industry consumes and adopts it. So I'll leave it at that.
Okay, thank you. Dave?
Hey, it's great to see you. Good to see my friends Mason and Luke and Nitin and everyone else here. Greetings from Austin, Texas. I am Dave Hendricks. I am the CEO of Vertalo. We are a digital transfer agent. We take analog assets, bring them onto our platform, manage them on a blockchain-enabled cap table, tokenize them, and then enable them to be connected to sources of secondary liquidity. So think of us as a cap table and transfer agent for the coming revolution in finance. So it's really great to be here. Thanks a lot, Ami.
Great. Daniel from R3 just joined us at the introduction stage. We'll get to you in a second. Luke, why don't you introduce yourself?
Sure. Hi, everyone. I hope you can hear me well. So I'm Luc Valentin, the CEO of Tokening. So for 3 years now, we help financial institutions like investment banks, funds, asset managers, or even mid-cap companies to represent their assets on the blockchain, tokenize them. So we came up with the Archax protocol, which is a suite of blockchain solutions to basically issue, manage, and transfer securities on a distributed ledger. And with this protocol, we already tokenized something like $27 billion of assets. And today we want to go further, so we want to be part of bigger ecosystems. So that's why we are here today.
Thank you. And Mason?
Hi, my name is Mason. I'm the CEO of TokenSoft. We help enterprises, asset managers, and financial institutions issue and manage securities on the blockchain. And so far, we've processed about $500 million through our platform. And most countries we've supported regulations in is about over 50. We recently announced a integration with Seba, Swiss Bank, and a rollout of our infrastructure in there. And we're very excited to be here.
Great, thanks, Mason. And Daniel?
Hi, everybody. Hope you can hear me okay. Ironic that the technical people have trouble connecting to the video chat. So my name is Daniel Eden. I'm a solution architect with R3. We're the company behind Corda and Corda Enterprise. So Corda is an enterprise blockchain platform.
Daniel is on mute.
I'm on mute. Hello? You can't hear me?
We can hear you.
Oh, okay. Sorry. Somebody said that I'm on mute. Yeah, so a lot of the companies that were mentioned here, Archax and some of the work with SDX and the DTCC, and a lot of it is kind of focused on Corda. So Ami, thanks for having me, and I'm looking forward to the conversation.
Great. So this is actually really exciting. We have here on stage, talk about the initiative, really the top enterprise blockchains and some of the people that built the first applications of digital securities. So I think we're definitely the right audience here to talk about, what we want to discuss. So the first question, I would say, in the context of this team group, so since early in the formation of the market, and we were all part of it, that the main benefit of digital securities is secondary trading. But here in the context of the economic crisis, we are talking about digitization and what it can do to dramatically scale the primary capital raises. So where do you see, from your experience, the benefits of primary digital securities for assets and for investors, and when the market becomes digital? So I think we lost someone.
Yeah, I think we lost Mason.
Yes. So, Dave, why don't you start with that? Where do you see the advantages of digital securities for the primary asset? We talked earlier about reaching a larger audience, about automation and so on. What do you see in that space right now?
Well, so one of the things that digital assets do is it changes the ownership modality. As opposed to having the ownership represented on a distant ledger, maybe a single entry ledger or a spreadsheet that's controlled by somebody else, where you're not very sure actually how your ownership is encoded, digital assets give you a much clearer title to the ultimate asset which you own. By having a smart contract which can be managed in a wallet, either self-sovereign wallet or some other kind of wallet technology, your title is often more secure. And besides the obvious secondary liquidity elements, your ability to operate and to account for that asset is stronger. So we think that digital securities, digital assets, change the ownership modality like full stop. And when you own something, you can take action with it. You can account for it better. So we're definitely focused on that use case. We're a little less focused on the fundraising element, but certainly we saw with ICOs that people like to use crowdfunding technology in conjunction with digital securities to speed up or democratize their fundraisers. That's also a possibility with the kind of digital securities we all work with.
Mm-hmm. I see. And look, where do you see the value of primary issuances in your market?
So yeah, indeed, we always talk about the secondary market because it's probably where the main value will come. Not there yet, but it's coming. So for the primary market, it's a bit more complicated. I think what blockchain brings is trust and transparency. So basically, for issuers, it's a new argument to convince their investors, to convince new class, new type of investors, smaller investors. I'm not talking about retail, but smaller investors, because it opens new asset class. Like if you want to invest in forest today, you need to wait 10 or 20 years before you can back your money. With tokenization and this creation of secondary market later on, you can invest today because you know that liquidity will come and it will be cheaper. And even without this secondary market at all, it is just a better form of securities, digital. So you can do self-custody if you want. It's way easier to manage digital securities and traditional security, way cheaper. And on top of that, you will get the secondary market. So I think for issuers, it will become a way to differentiate yourself from other investment opportunities. And very soon, everybody will propose that kind of that form of assets. So issuers will not have a choice to do that.
Yes, I think that in theory we all know that. And I think the biggest problem we've seen with primary issuances until now is that until financial institutions were in the picture, then distribution was limited. And I guess that once we can get financial institutions, and we talked about this in the previous panel, if we can get them aligned and integrated, then the demand is out there. Mason, are you seeing the demand for primary? Have you seen it? Assuming that there would be distribution, do you think that other companies would be coming?
I think so. I think the demand for is going to be the same as the traditional markets. So I think one challenge is we've taken traditional markets and we put it on more complex infrastructure, and so that presents a problem. And so I think just streamlining that as much as possible and seeing if we can make it simpler versus traditional markets is one thing that'll help. But I think what I always tell people is the same demand that you would have if you approach the market traditionally is the same demand that you would have while issuing your asset on the blockchain. And so we sort of see the security token market working in flux, I think, with the traditional markets. Up until maybe a couple months ago, it seems like there is a push for more innovation in the security token space. Seeing it as sort of, I think people are trying to find an alternative traditional markets to see if they can innovate a little bit more in this sector and to see if something new and interesting is possible versus traditional markets.
So for the next question, I want to ask you a question that I think it is at the heart of what we're talking about here. I mean, all of us are here work in the same ecosystem, and some of us compete with each other fiercely, while some of us do partner with each other. Do you think it is really advantageous, basically giving an advantage to us, or even critical for us as an industry to cooperate on an open shared market and a network? And what would you expect from such a network in order for you to be able to fully support it and to put your weight behind it? And the question is basically, we all are building our own platforms. I mean, I've been building Ownera and IBM. You have Fabric, obviously, Dave. You have Vertalo and Tokeny and Tokensoft and R3. We're different platform building different things. What is it that's going to bring us together to build a shared network? And what are the advantages and what are the things that you would expect from a network like that in order for you to participate and to contribute? Maybe Nitin, we'll start with you.
I've spent literally the last 4.5 to 5 years in contemplating this notion of interoperability, right? Because you have all these, so there are two elements of this. One is interoperability at technology level. So you have, of course, between Fabric, R3, Ethereum, there's a whole slew of technologies that make interoperability a challenge. We begin to see a whole new slew of protocols emerging to address interoperability challenge. But again, going back to my elements of what we looked into infrastructure and instruments, which means that we build infrastructure in such a way that these rails, which are designed for purposeful, whether it's security tokens or eventually it'll be, most of these rails would have to deal with, if not dual, but multiple asset classes. Only because you don't have a singular asset class in one specific rails, you do need to have elements of, let's say, a security token and digital fiat to address settlement options and so on and so forth. So we have two options. The options would be either do we rely on singularity of these rails to deal with a single asset class on each of these rails, because there's a notion of technical elements or smart contracts, regulatory elements, and dealing with the audit and regulatory compliance requirements, it makes it a lot simpler for a single asset class. Or do we rely upon the single asset classes to connect with each other to say, I'm going to move securities on one chain or one infrastructure, I'm going to move payments on other infrastructure, which is what's happening today, albeit in a fragmented way. I believe that in some cases, what we're trying to address is if we have a dual asset class sort of infrastructure or rails, which allows you to be able to focus on a specific asset class and, let's say, payments for settlement purposes, it solves a lot of immediate challenges as opposed to dealing with a multitude of sets where you could have a potential, let's say, a settlement rails, which does settlement for all the different asset classes, and you can have an asset classes defined on separate segments. And thereby, I think one way to solve this problem is provide a layer of technical sort of interoperability, a technical layer, which means that I have the ability to connect these rails, which allows the free flow of movement of these digital tokens and digital assets, which gives rise to all the things that Mason, you talked about, and I think Andrew Peel talked about, is creating interesting business models that that simply don't exist today. So the first step would be digitizing it and then eventually creating that new business model that comes from it. So that is still an ongoing challenge. I think standardization, which is I think what you're trying to do with some of the digital sort of token summits and what this particular body is doing, and the cure, the 6 sort of pillars you had in the cure slide, I think is the step that the industry should take, is standardizing protocols, not just at technical layer, but also at the tokenized security layer, which makes it more consumable, by the industry. Does that make sense?
Yeah, definitely. I think that the initiative that we're talking about is, and really the first month of this, first month is about designing the architecture and looking at how things will connect and what network can we connect to, and how can we allow, on the one hand, multiple blockchains to work together, and on the other hand, multiple front-end platforms like services platforms and so on to work together as well. And I think that there might need to be a kind of a layer in the middle, some sort of virtualization layer where everybody can connect to and ask questions about, what the API, what is this asset? Can we do a transaction on this asset? It should be very, very digital securities specific, while this network layer can then go down below to the actual blockchain and speak in the blockchain's own language and basically manage it internally there. And I think that, Dave, you have some experience in building connectivity to multiple networks. So do you think it will be complicated for you to connect to a financial institution network, or is it going to be very simple based on, because the front end is the same front end, right? The services company provides similar services, whether it's on a network or on an isolated network.
You're on mute, Dave.
You're muted, Dave.
Yeah, so this is probably an API discussion rather than a tokenization discussion. I think in the first iteration of security tokens, we learned the wrong lessons from ICOs. In ICOs, the idea was that tokens would be issued to holders in wallets, and then those holders would then take those tokens and trade them anywhere. So what they basically created was super simple, very standardized forms that could be traded on all kinds of different venues. And that was, that was a lot of freedom. That was useful for a lot of people. In securities, however, if we're going to take any lesson from the current financial system, we're not going to see an exchange or an ATS trade just any security, because the buyers and sellers won't be able to find each other. You have to create some kind of bid density. So the notion of programming a token with all of the complex compliance requirements of all the different jurisdictions is probably going to be overkill. So I think we have to agree on simplicity and interoperability, like what Nitin was saying, a shared language, and then enable companies to build value-added products that can look at the tokens or look at the other systems and parse them and communicate effectively. At some point, you have to build IP. You have to build something unique in order to make money. And if no one's going to make any money, this thing isn't going to take off. So standards are good. Uniqueness is good. But what we need to do is, I think the most important thing is to have a common language. And I think ultimately that's going to be arbitrated by APIs. And, I'm looking forward to it. In a few minutes, we're going to show the power of APIs when we demonstrate some work that we're doing together with Vertalo and Ownera. And that's really API driven.
Yes, I think Mason, you also, I think, worked with multiple blockchains as well. So I think you already kind of know how it works. I'm assuming at your layer, the underlying network, the technological way to connect it is less important than the commercial and financial models that you can, and the distribution that you can offer to your assets and so on. Am I right in this assumption?
so you're and just to clarify what you're saying, you're saying that the I guess the commercial relationship is more important than the technological relationship and how those connect.
Yes, what I'm saying is that if we built tomorrow, if this group came tomorrow and built a new network that all the financial institutions are connected to, at your layer of the value chain, where you provide services to clients and you provide services to assets and so on, is it true that the technology itself is less, how you connect to the API is less important than the actual distribution and value?
Yeah, so just like a bit of our experience building into this stuff. So previously I started a payroll automation company, which today it powers about 14% of the 401k market. And with that, we had to, again, package technology, roll it out into these major brand names in the payroll space. And the last company James and I started, my CTO co-founder, was to roll out blockchain applications in insurance companies. And so they all have their own packaging requirements they want startups to fit into. When we started approaching financial institutions in the blockchain space, like Fidelity, which we rolled out technology into, and Seba, the challenge is exactly the same. So it's how do you take this stuff and package it in a way where it's acceptable by these financial institutions? So we haven't really had any issues when it comes to that, and that's been fairly routine. And I think it's just about meeting these companies in the middle. Just like anyone that you work with, they have expectations, you have expectations. It's a matter of packaging those together to roll out a joint solution that everyone is comfortable with.
Okay. I mean, the next thing I wanted to ask you guys is when I've been talking to digital, and I've been, since I published this post, I've had 10 calls a day with all the market participants. And one thing I've heard from some financial institutions was there were a few misconceptions, but one of them was that the technology / regulations is not 100% there yet to go full production. And what I wanted to ask you is specifically with regards to the ability to launch primary. Let's assume, like Sven said, and he brought the example, this great example from the Italian bridges, where let's say assume that secondary will come at some point, and we don't need to do secondary now. We need to break it into pieces. Would you be able to say that we can actually do primary launch of security tokens on your platforms today, end to end, at the level of technology that is institutional grade, or do you think that some components are still missing in order to be able to do that? If you are challenged, just each one of you with your own company, do you think that you would be able to achieve that feat before being connected, or are we still not there? What is your view on that?
So I'd like to add something to this. So I built this private equity network about 4 years back, and this was publicized with Northern Trust. Again, solving the problem of highly illiquid markets and the cost that goes into the legal process and shared cost of infrastructure. This is one of the pillars that you have in your cure slide, which has the 6 sort of addressing elements. And one thing we realized that if we are simply digitizing our existing flows, so digitalization is the first step of revolutionizing many of the things that we talk about in the industry, right? The global marketplaces, ability for us to fractionalize these tokens. Dave, you've talked about this in many cases, that ability for me to move token real time to a certain ownership elements. So digitization is the first step. So if you're simply digitizing the marketplaces, then the notion of fitting that model into the existing regulatory framework, because regulation doesn't control and tell you which technology to use, as long as we are adhering to some of the frameworks that defines and governs that particular asset class. So from that perspective, if we're digitizing the flows and securitizing the whole thing, I think we are okay, and we can still function and create sort of a parallel infrastructure to deal with creating new opportunities for small and mid enterprise, which I think is the area where no longer the industry challenges to say we're going to disrupt the capital market space, to say we are creating a better infrastructure and a faster and cheaper way for smaller companies to generate this capital formation, which I think is a brilliant way to approach this as opposed to disrupting the capital markets. However, I think when we begin into going after some of the elements of the features of using, let's say, stable coins for settlement purposes, well, now we are hitting some of the uncharted territories where regulatory bodies, and I've spent literally 60% of my time in the last year working with some of the regulators. Now we are dealing with entities where we're saying, we don't really know the space really well. Technology can facilitate it, make it happen. But how do we deal with using stablecoin for settlement, for instance? Or, like Dave mentioned, how do I fractionalize this particular asset and make it available for a much larger marketplaces globally? Well, that is something which we still have to catch up. So I think we deal with building this baseline infrastructure first. And as we educate the regulators and work with them, some of these newer business models and the appropriate frameworks comes with it. So I'll pause at that and see if that makes sense.
Yeah, it does. I think that you mentioned, for example, stablecoins. Stablecoins are not yet approved, and maybe we can't use them but we can find alternative solutions like automating escrow services and doing specific digital assets. So I think this is the right approach, breaking it into pieces that are chewable and manageable, and especially focusing on the piece that the market needs right now to get out of the crisis. And how about you, Luke? Do you think that within your organization, or have you seen the ability to launch end-to-end digital securities primary? Do you think that this technology is matured enough now to be deployed, or are we still not there yet?
So from the technology perspective, we are there, but we use the Ethereum public blockchain, but maybe with a different approach, because we have this concept of on-chain identity. So we don't try to control the nodes of the blockchain. Blockchain is there, it's resilient enough. You have a consensus for transaction, you accept it or not, but it's a technical consensus. And on top of that, what you need to do is to control who can do what. So as an issuer, you need to control your agent, you need to control your investors to be sure that only eligible investor will receive your tokens, and so on and so forth. So we basically give an on-chain identity to everybody. And it allows us to basically define roles, responsibilities, rights, and duties for everybody. So we are in this middle ground, as you were saying before, where it's public infrastructure, but with control. And I think that's what we need to keep in mind, is that we need decentralization, we need interoperability, and creating another private network will not help, obviously. However, we need to build a lot of tools on top of these blockchains, and more you have cross-chain solutions. So that's why today we want to open our systems to other networks coming on top of these blockchains that are already there. So we have the solutions. We already tokenize like funds, equity, commodities, a bit of everything. But depending on the jurisdiction, the blockchain is a primary registry, or it is not, and it is just a mirror of the traditional registry. So basically, the token is just a proof of ownership. So it really depends, but the technology is there, and in most countries, the regulation is there as well. In Europe, at least, it's pretty concrete. They say security tokens are securities, and you can dematerialize your financial instruments. So in most countries, it's fine. In the US, it's a bit more complicated.
No, I agree. I mean, that's what we're seeing as well, and I'm happy to hear pretty much the same thing from all of you. And I wanted to see that this message is coming across also to the financial institutions that we're talking to, that the industry is there in terms of the ability to deliver. It's a question of, we had 6 people on the line, now we have 5, and we could work together to actually create an infrastructure. What I wanted to do now is, if you will excuse me, we had some issues with the Hopin platform, and for some reason Daniel couldn't be online, but I wanted to give him a few minutes to answer as well. So we want to make a quick change now in the panel and maybe just bring Daniel on. So and I'll do a one-on-one with him quickly, and after that Dave will bring you back on for the demo. Does that make sense? Okay, so thank you everyone here. And let me get Daniel on board and ask him a few questions as well, because we'd like to hear from our 3 also. Thank you, everyone.
Thank you all.
Thank you.
Thanks, guys. Bye.
Hi, Daniel.
Hey, Ami, how are you?
Okay, great. I'm sorry about the mishap with the technology.
No worries, no worries. I have to admit that I think I missed half of that conversation just downloading Firefox and trying to troubleshoot all the different things. So I apologize in advance if I say anything repetitive.
It's interesting. We're all learning to work in a new normal. I mean, if this was not the case, it would be, you know, we have nearly 500 people here. If this was not during Corona, 500 people would be on planes flying to wherever we did this thing, and we would all be sitting in one room and going back. And now it's 2 hours where we supposedly log in, do the discussion, and then log off. But then, you know, there's a learning curve as well in these things, and I think this is we saw some of that here. So,
absolutely.
So what we talked about mainly was the readiness of the technology behind digital securities to do two things. One is, can we deliver digital securities primary issuance today? Because if we want to deploy something in time for the to react to the market crisis and to help these thousands of companies get to their investors on the financial institution, we cannot wait 2 years. And therefore, we only need to take existing technology. So, you know, my first question was about, is the technology ready today? And the second question would be, what would it take from you to cooperate with your competitors? And I'm not putting you on the line. I asked everybody the same question. What would it take someone who is a competitor in an environment cooperate with their competitors in order to create a bigger pie or a bigger story or a bigger solution for the actual users who actually need that bigger solution? So why don't we start with the first thing? Where do you think we are now on the curve of development, and are we ready to deploy primary issuance solutions? You know, at least in your world.
Yeah, great. Those are two great questions, Emi. Thank you. So it's interesting. You know, I think our CTO Richard Gendel-Brown wrote an interesting blog post a little while ago where he was talking about the hype around blockchain and the worthiness of it. And his argument was basically that the hype isn't dead, just the people that are busy doing real things are in what he called the trenches of deployment, right? So we spend less time out there, you know, waving our blockchain flags and more time, you know, in the trenches actually building stuff. And I would say that, you know, when I look at the body of work that is going on globally with Corda and with R3, you know, from, you know, the Swiss stock exchange that's replatforming part of its protocol into the Swiss digital exchange, all the way through to the real work that the DTCC is doing, to Archax that we had on the panel. I mean, these things are ready. They're ready to go live. And if anything's holding them back, it's definitely not the technology, right? The technology is absolutely there. In fact, you know, one of the recent RFPs that we were just working on with the Banque de France included something very interesting that was actually kind of an end-to-end payment delivery versus payment for a real digital asset, right? So we've moved from, you know, being in the laboratory environment to do, you know, proof of technologies, to really saying, okay, well, we know that this tech works. We understand that this could be brought into the market. Now, what's stopping us from doing so? You know, and, you know, often it's regulatory, often it's commercial structures and the like. But, you know, the technology is there, and from the ecosystem adopting it and actually using it, it's ready. And in fact, some of it is already in market. So the maturity curve, I would say, is very much there. Your second question kind of about competitive forces within this space and that kind. I mean, what is interesting here is that we all understand that this is a participatory kind of exercise, right? There isn't going to be one platform to rule it all. There's not going to be one application to rule it all. In fact, part of the problem stems from this kind of siloed environment, right? So I think there's the willingness across the board to cooperate for the greater good. I would also say that it's not a zero-sum game, right? If you look at the fraction, if you look at the entire space that we're working in, I mean, to think of it as a zero-sum game, I think is very much kind of fighting over breadcrumbs. There's a bigger agenda here. If we all cooperate, everybody will be better off, from the clients all the way up the stack, so to speak. What I would say is, I think there's a lot of you know, unnecessary or kind of hype around interoperability, right? This notion of, well, you know, all these things have to work together, and if they don't work together, nothing's going to work, and everything has to work together all the time. And you know, being in the space for a while, I can say that, you know, we had a lot of pressure to interoperate with other platforms and other protocols really, really early days. And I think we made the educated effort of saying, we're going to let
the dust settle. We're going to let some of these players consolidate, and then make sure that when we do build these bridges, because it's very analogous, not to bring back the bridges into the story, but it is very analogous to building bridges. And one thing to make sure before you build a bridge is that you're building bridges from two solid pieces of land to each other, right? So I think that we're in a place now where the industry is ripe and the dust has settled, and the structures are there to start building these bridges. And I would say that these bridges are going to be built very much, they're going to be driven very much by commercial incentives to work together. So these opportunities need to exist where that corridor of building a bridge, where an asset needs to move between, a French jurisdiction and a Swiss jurisdiction, and you have the players that are willing to put the necessary time and effort into building out the infrastructure, both from a technology and a governance perspective, to make that happen. So I think these bridges are going to pop up slowly. They're going to pop up by necessity, not just because someone says, oh, everything has to work together all the time, because that's going to be, very much trying to boil the ocean. And like you said, we want to do this in the short term, not in the long term.
Yes, and I think what I would say to you mentioned that the financial push and the commercial push. The interesting point that I do see is that we now have an external kind of force of nature, okay, that landed upon us, and suddenly all those companies need to raise capital and will need to raise capital. I think I saw this. I don't know if it was mentioned earlier, but there was some country that, I think it was India, where it was publicized that 70% of their startups are going to run out of money in 6 months. So it's not happening. They're not running out of money today. They're running out of money in 6 months or in 9 months, and so on. And I think other countries and other asset classes are going to be similar. And we do have here a chicken and egg situation. We have a situation where those assets will not go digital if there's no market. Okay, they will go digital if all the financial institutions, as I said before, 4 of the top 5 investment banks and 5 of the top 10 asset classes, and others as well who call us SINs. If they all go in, then you will have much more of incentives for the companies to come. And when the companies come, there's more incentive for the financial institutions to come, and suddenly the market is significantly bigger. And I think that this need to interoperate has also an element in some of the discussions I had with financial institutions where they say, we are afraid to jump in because we don't know who is going to win, and we don't know which asset class is going to be more suitable for which. So maybe one network is better for privacy, and maybe another network is better for high frequency. And we don't know exactly where to put everything. And if everything was actually connected, it would make life easier. Do you think that plays a factor as well?
Yeah, I definitely think that plays a factor, but I wouldn't necessarily conflate the idea of jumping in with betting on a single player. I think there's a lot of opportunity. There's a lot of places where there's pitfalls for vendor lock-in or potentially putting too much investment in a specific type of technology and so forth. I mean, you kind of want to diversify as an organization what you're betting on. So to jump in doesn't mean to bet on a single player, both at the platform level or at the asset level or at the infrastructure. Like there's no real connection between those two. So if you're hesitant to jump in because you feel like jumping in implies that you have to pick a winner, then basically by definition you're saying I'm going to sit on the sidelines until the market is there. And I think we understand, Ami, as your blog post very, very well kind of identified, is we don't really have the luxury of sitting by the sidelines anymore. There's an impotence to move. This is critical. We understand the need on both sides of the market, and I think the time is now. So my strategy when we work with clients is really to empower clients to feel like they're taking steps forward while still leaving themselves as many options as possible, both at the platform and at the solution and at the asset level, right? If done properly, choosing to jump in doesn't necessarily mean picking winners. And in fact, I would argue that no one's really going to win. That's not the point here. There's enough market share for everybody. And in fact, it is to some extent a zero-sum game if nobody jumps in, and the sum's going to be zero for everybody. Right. So if done correctly, I don't think that should be there shouldn't be any hesitation, and that shouldn't introduce any friction on the way to getting involved with this type of work. And I think that we see that, we see that a lot in the digital asset space. I would say that we see that a lot in the central bank digital currency space. We're increasingly seeing that in the payment space. I mean, you don't need to make a single bet to start to start moving forward with this type of technology and new digital asset classes.
Yes, and I would add to that if you know that everything is going, that all the industry players are working together to interconnect and to interoperate, it makes the decision even easier. So that's the part of the kind of focus. And I want to use this kind of a stage. I think you want to say
I was gonna add one thing. A lot of people look at the interoperability layer as if it kind of equals the playing field, and to some extent it does, but it also gives the opportunity for the different platforms and the different vendors and all the players to compete in a way that they can offer added value and services to their end clients. So it's not a matter of saying all blockchain platforms are equal or all issuers there's no silver bullet. They all have their strengths and weaknesses, and the idea is really to enable that competition, because that's also what you said, that as was mentioned earlier, the tide rises and everybody's going to rise with it. So we need to create a scenario where there's healthy competition between the platforms. They interoperate, but they can facilitate the aspect that maybe some platforms work better for certain asset classes and some platforms work better for other asset classes. But in either way, you're not locking in or creating a scenario where you have stranded assets that would inevitably impact the client, right? So to me, it's about creating an arena for healthy competition. And if you frame interoperability like that, I think that makes a lot more sense. Because the alternative to that is to say it's all the same. All blockchains are the same. All issuance platforms are the same. And for anybody that deals with this more than just at a superficial level, we know that they're not the same, and there is no silver bullet.
I agree. They're not the same, and I think that therefore I think that the network layer that connects the blockchains and it should be thin. It should be a thin layer that can take care of just the interoperability and let everyone shine where they shine and let everyone compete where they compete and try to beat their competitors and therefore innovate and continue to innovate. And we've seen this in standards before in the history. I mean, in the long back history on the browser wars. IE was basically taking over and basically shutting down all the standards bodies, and then Firefox came in and reopened them. And now you see the same thing with a new browser like Brave coming in and shaking the market again. So you're seeing it in other industries as well. And I think that this is the right time for us to move ahead. And I want to call, we have some people here in the audience from different companies and so on. So this group that we have, and you're part of it, and Nitin is part of it, and all the people in the group are part of it as well. So we are calling for market participant on a financial institution side and on a technology side and even the regulatory side and assets and so on to come in and connect with us and interoperate and join this effort. So sorry again, Daniel, we couldn't get you mixed with all the others, but I wanted to give you some time to share with us your views as well.
Perfect. Thank you so much. Thanks for having me, Ami, and we're looking forward to working with Ownera and the rest of the group.
Thank you, Daniel. So thanks. Next on stage, we're going to see, I think, a short demonstration that I put together with Dave, who was here before. Can we put Dave on stage with me?
Yeah, man, I'm back.
Hi, everyone. Let me just see. Okay, so what we want to do right now is to we talked all the time in the last hour and a half or so about how the technology is here, the regulations are here, and a network can allow people to work between them. So what I wanted to show you today, together with Dave, is a demonstration of two institutional level platforms working together, where hi, somebody joined you there, Dave.
This is William. So we're not going to social distance here. We're co-founders, so so go on. So
great stuff. Yeah, I'm not used to seeing two people together. So the idea of this demo is to show that at least on the front end side, at least on the services side, once you have a single network that can give you an open API, everybody can very easily connect to. And William and Dave will testify that we gave them an API to do this thing. What was it, last week? And it's just a JSON with some definition. They were very easily able to connect to it. So actually, it's not going to be, maybe on some level, it's going to be a very simple demonstration. But I think that's the nice thing about it, is that it's simple. And that's its actually goal. So I'm going to let you start by showing. What we're going to show here is we're going to show demo an asset that goes digital. The asset is called Atlantica. It's on the Ownera network, sitting on a blockchain, connected to an institutional grade blockchain, a version of Hyperledger Fabric, and we will show how Dave's platform, which is a transfer agent, a licensed transfer agent to manage cap tables and so on, can import the information from the network, and then I will show you how we're doing transactions on the network, and then you'll see it back on the cap table updated instantly. So why don't you take it, Dave?
Yeah, so here's one of the screens in Vertalo. Again, if you were here earlier in the in the session, Vertalo is a digital transfer agent. We manage on-chain cap tables and shareholder registries, and we connect to other parties like Ownera via APIs. So, so I've got my partner and co-founder William here. So, William, what are we going to do here right now? We're gonna bring in an Ownera asset, right?
That's right. So we're going to hit their API and import from Ownera here.
You see, we've got a choice here, Ownera and Carta, because of course, all Carta clients will come to Vertalo eventually. But Ownera, we're going to do a real-time connection via API to Ownera system. And we're going to go for the Atlantica asset, right? Okay, here is the Atlantica asset. Here is, we're reading the Ownera API. This talks a little bit about this asset, Atlantica Incorporated. It's located in Houston. You know, again, Ownera is a know your, KYA, know your asset platform. So here's information about the asset. And it's human spaceflight. Who doesn't love that today? Okay. And we're going to import that. We're going to import the cap table into Vertalo. Okay, so we've just brought that in. We're going to close this out right here. Okay, now let's go into the Atlantica asset right here. This is the Atlantica Series A. It opened on May 1st. It closed on May 1st. There's 100 million units. Let's open up the asset.
And there's the cap table.
Yeah, we're just going to wait for this to resolve. I think the signal is a little weak for you guys on screen. Sorry about the resolution here. So now what we see here is we see three owners in the stakeholder ledger: FinGrowth, Investor Fund, and BR Capital. And now I believe we're going to hand off the camera back to and just remember these numbers: 500,000, 403, and 1 million. Okay, look at the units here. Those are the current units, and we're going to hand off over back to Ami, and we're going to come back to this in a minute.
Okay, so now we're on a platform, and this platform is delivered by this bank to their clients. And those clients, because this is an institutional network, they just log in with the bank's username and password. They don't need to create accounts on any crypto blockchain or anything like that. They just log into their bank account or their bank dashboard. What they can see is a list of the assets that are available for purchase. You saw some of them in the import list: Atlantica, EagleBase, and other assets. And for each one of them, you can see all the details that appeared on Dave's platform as well. So replicated on the transfer agent information, you can see the money that they put in the account in order to make some investments. And I'm going to show a simple investment. So we already own 403,000 shares. And let's say that we want to go in and add another 100,000 shares. I'm going to click confirm transaction. Now what happens on the Ownera network is when I click confirm transaction, it will go down to the Hyperledger Fabric. Over there, it will go to something that we call the Regulation App Store, where there are apps that verify the different regulations that Atlantica wanted to be compliant with. And then 3 seconds later, this transaction is instantly settled. So the money was reduced. As you can see, I have less than $40 million now, and I have 503,000 shares of Atlantica. And pretty much that's it. And I think it's important to see that simplicity in the context of what we talked about earlier, about what it means for an investor to really invest in Atlantica in the old world, in the analog world. It will require everybody to send documents online. It will require legal discussions with the lawyer, and then you have to send the money manually to their bank account, and then they will send you, they'll put you on an Excel sheet or on Carta or something like that, and then it's done. It's a process that can take weeks. Now, what you've seen here is actually better than what you can see on the public networks. Even on a public network, if you buy a share from Apple, you can't just go and take this share 2 minutes later and sell it on a completely different exchange. But over here, the digital security is immediately transferred. And if I look at this is a screen of Atlantica, and I refresh this screen, you can see that I have more money now. I have $20 million, which I can redeem. I have more shares, and I can go inside and I can see the new number, 503,000 shares. And the same thing, this is the admin at the bank, and the admin at the bank who manages this account can also see that the new cap table is updated. And this is fully settled, but it's not just fully settled on the Ownera platform. Now I want to hand back to Dave and team and show what it looks like on their platform. Dave, you're on mute, I think.
Sorry about that. Yep, so here we are, we're back, and we'll go back to Vertalo, and you can see that we have updated the amounts over here in FinGrowth, okay? So.
Okay. So sometimes when I'm doing demonstrations, I have to apologize how fast and simple the demonstration is, but that's the whole idea, right, Dave?
Do we want to show do we update the investors or not? Nope. No, just
okay, I think we can stop here. And thank you very much, Dave. I think this is what we wanted to show today. Just how simple it is once you have a network that everybody can connect to through an API to bring the entire industry to work on the same ledger, which is in this case sitting on an enterprise interconnected network that multiple financial institutions can connect to. So the technology is actually here. I think that kind of concludes my part in this, and I want to hand back to Anthony for maybe some closing remarks on this event. So thanks, Dave. Goodbye.
See you, mate.
Anthony, you're going up now?
Hey guys, I just hopped in really fast just because I've been looking at the public chat and there's been a lot of stuff. Oh, we lost Dave for a second. But I just wanted to hop on because Alon here again from Draper Goren Holm. A lot of folks, adding Dave back, were in the public chat just talking about how a lot of the stuff that people were talking about earlier is not going to happen. People aren't actually going to work together and all of this stuff. But it was extremely, like we just showed in this use case, and Anthony can attest to the conversations he's been having and all the private conversations we've been having in at least this unique climate, and I think across all climates when people understand the larger market, everyone is willing to work together because they're seeing the opportunity here. Dave had a great comment earlier. I think you said something like, we're not competitors, we're complementary or something, to some of the people joking in the chat. But I just wanted to show how this one simple cross-chain solution was built, and how, you know, genuinely the rest of the crew on here were willing to work together as a consortium moving forward together. So whether it's an official consortium or whatever, we'll let Anthony deal with that kind of stuff. But I just wanted to point that out, and really excited and thank everybody for coming, and excited to have Anthony do the recap here. So thanks everyone for doing that so quickly and showing everyone how possible it is to work together to build something much bigger than each individual player in the space. So love it, guys. Thank you.
Thanks for having me.
Thanks, Alan. Thanks, guys. That's fantastic. Okay, so hopefully you found this a very useful session. I've been involved in various industry consortia in the blockchain DLT space. I think what is different now is this convergence and diversity of different institutions, large buy and sell side institutions, fintechs, some of the largest exchanges in the world. And I think there's a recognition and a level of cooperation that it is in our common good to create this platform on which we can achieve the distribution network to help these companies and bring them together with the right investors. One thing I did want to, and I would say one thing you can't see for the people who are joined is the backstage chat that we have on one side. So we had some fantastic examples of collaboration. One of them, Mason, tapping away to Daniel, telling him to turn off his ad blockers on his Chrome browser so that he can get in, and all this good stuff. So I can tell you there's a lot of collaboration between the various entities. But one other thing I wanted to say, and probably more than a few people on the conference will have noticed, we lacked a certain diversity in that we had all male panels today. And I just wanted to say I work with a lot of great female leaders in the digital finance space, and we have a few of them on the steering group as well. For various logistical and practical reasons, we couldn't get them on the panels today, which is unfortunate, but no excuses. We'll do another one of these sessions, we'll do better, and if we can't, we'll move the date. So I just wanted to I thought it was fair to make reference to that. So overall, I think what we learned, I mean, maybe a crisis is a catalyst for change. I think you can see that there are large institutions and fintechs and various stakeholders in this space coming together to make this a reality for the industry. We've seen the technologists. A few years ago, technology, I think, was the overwhelming constraint. I think you can see the technologists that have demonstrated, described that it's not a limitation, and also demonstrated through that demo just now that these things are achievable. So I think it's the only barrier is us now. It's the will for the various parties to come together to build the networks that make these things possible. We're convinced that a good route through this is to focus and build a network, helping private companies out of this crisis as a starting point in the primary markets. And then I think we will grow capabilities on from there and leverage on the many other great initiatives that are working in this space. So we welcome your feedback on the session. We've had a lot of, we've been looking at the chat as that's been going past, but also welcome your feedback through LinkedIn and direct to us. We also, this is a very open initiative for those that have bought into this vision. Interested to hearing from you and how you might contribute to that. That's about it. I think the other way, we always say in a large, when my days working in a large company, that a good way to curry favor with people is to always finish a meeting slightly early. So I think we're a few minutes early on the 2 hours, I'm sure, but we've covered what we need to cover. I think it's been a great session. I'd like to thank everybody that was involved. I'd like to thank Draper Goren Holm for organizing the session, Security Tokens Realized, for helping pull this together, to all our panelists. And I think that's it for now, and look forward to the feedback, and hopefully we'll have another session soon that we can bring you all onto. Thanks very much. Bye for now.